Stablecoins run the entire crypto economy. But why stablecoins are in trend now? Because a profit game? In just the first quarter of 2024, Tether, the company behind USDT, made a jaw-dropping $4.52 billion in profit, outpacing even Wall Street giants like BlackRock and rivaling big tech players like Meta. In crypto space, you must have heard about USDC, USDT, DAI, and PYUSD stablecoins. After USDT, USDC is the second largest stablecoin with $63 billion market cap in July 2025. Circle, the company behind USDC. If you've used DeFi or traded crypto, you've touched Circle's work. Together with Coinbase under the Center Consortium, they issue USD Coin, promising every token is backed 1-to-1 with real cash and US Treasuries. But even this safe stablecoin faced chaos in 2023 when Silicon Valley Bank suddenly collapsed. $3.3 billion of USDC reserves were stuck. Panic hit the market. For a brief moment, USDC lost its peg and dropped to just 80 cents. That's right, the second biggest stablecoin crashed below $1, and everyone thought it was over. But when US regulators stepped in and guaranteed the deposits, Circle restored confidence, and USDC shot back to $1 almost instantly in a couple of days. That moment showed just how centralized and yet critical these stablecoin issuers are. Next, we have Paxos, another US-regulated powerhouse. Paxos is the company that minted BUSD, Binance's famous stablecoin, and also issues its own Pax dollar, USDP. Unlike Tether, Paxos is overseen by the New York Department of Financial Services, meaning their reserves are tightly regulated. For years, BUSD was one of the safest stablecoins in the market until regulators ordered Paxos to halt minting in 2023. That move reminded everyone that no matter how big a token gets, the issuer can make or break it overnight. Of course, we can't talk about stablecoins without mentioning the giant Tether or USDT. It dominates the market with the largest supply and deepest liquidity. But unlike Circle and Paxos, Tether isn't US regulated. It's issued by a Hong Kong-based company, and while they claim every token is fully backed by cash and bonds, their transparency has been questioned for years. Despite the controversy, Tether has proven incredibly resilient and remains the backbone of crypto trading globally. Then we have DAI, the stablecoin that breaks the mold. DAI isn't issued by a company. It's created by MakerDAO through smart contracts and over-collateralized crypto assets. It's decentralized, meaning no single entity can freeze or print it at will. But with decentralization comes risk. DAI depends heavily on crypto collateral, which can be volatile in extreme markets. So, who really controls the money in crypto? Circle and Paxos are the most regulated issuers, giving you traditional finance security in a digital asset. Tether remains the giant that powers the market, while DAI stands as the decentralized alternative. But as the USDC depegging event showed, even the most trusted stablecoins can face black swan events. Which one do you trust the most? Drop your answer in the comments, smash that like button if you learned something new, and subscribe for more deep dives into the real power players behind crypto.